Hi, this is James Shug with Westpac London's end of day report for Tuesday, November the 6th. Well, it's election day in the US, and that seems to be the reason equity markets are doing very well. We're seeing, particularly in the US market, progressive steps higher in the major indices there. The Dow at the moment, and it's 4:45 in London, is up just over 1%. At 13,246, and European markets have been carried higher too. Their closing rates prices will be a little bit higher than I'm quoting because of the 20-minute delay I've got on my printout here. But just before the close, we're looking at the London market up 2/3%, the French market up 0.8%, the Germans up 2/3% as well. Spain up 1/4%, and the Italian market up almost 1%. Now, the data today was pretty ordinary. I mean, the New York ISM, not a closely watched survey, but it was very weak. It was delayed because of the storm, but surveyed before it, and it fell from 53 to 46. That's its second lowest reading since the recession of 2009. The composite PMI for Euroland, October, it was revised down by 0.2 to 45.7, actually down by 0.3, sorry, to 45.7. That's the lowest reading it's had since the recession of 2008, 2009. And it would be consistent with GDP contracting at around a 0.5% pace, if history is any guide. We had in Germany factory orders down 3.3%. Now, orders were down from within Germany, from the rest of Europe, and also internationally, and they're down 4.5% over the year. More evidence there that Germany is no longer the engine room of Europe. It's probably in recession now. The UK industrial figures were very weak. We saw a 1.7% plunge in industrial production in September. Most of it was driven by oil. The maintenance of oil and gas rigs meant there was a 21% fall in that sector, but the factory output numbers were weak too, just up 0.1%. That followed a 1.2% fall in August. So when we get the revisions to the third quarter GDP numbers, which were solid, up 1%, partly due to the Olympics and the Jubilee effect from the second quarter, risk is we might see a bit of a downward revision there. The British Retail Consortium reported soft retail sales in October after a brief spike in their September survey, and house prices down for the fourth month running on the Halifax survey in the UK. So as I say, the data are not particularly good, but looks like the removal of uncertainty, election uncertainty in the US, even though we don't yet know the result, seems to be driving markets higher. Some things to watch for in Europe tomorrow, I mentioned. We've got Angela Merkel addressing the EU Parliament. We're probably going to get the Greek vote, the Greek parliamentary vote on the latest austerity package that's been agreed between the government and the troika of IMF, EU and ECB officials, but hasn't yet been approved by the Parliament. In fact, the coalition government itself is still arguing about it. So that's going to look a year after the referendum debacle. Greece is still causing problems. And we're also going to get the European Commission's latest forecasts. They publish them twice a year. Actually, they're going to be publishing them 3 times a year from now on, but their autumn forecasts are out tomorrow. And we're expecting those to show a downward revision to their 2012 forecast for GDP for Europe from 0.3% previously. Okay, so commodity markets have done pretty well today as well. Copper's up 0.6%, gold's up 2/3% at $1,694 an ounce, and oil's up 1% at $86.54 a barrel. And the Aussie dollar, it's at 1.043 against the US dollar at the moment. I mean, the Aussie spiked when the Reserve Bank didn't cut interest rates yesterday, and it's pretty much held that higher level since then. So that's it for today. I'll be back again tomorrow. Apologies there was no report yesterday, but I was on a leave day. Okay, back tomorrow.